The mortgage industry today looks a lot different than even it did a year ago. I was reading in the New York Times yesterday that mortgages are up 3 percentage points. That's a lot in mortgage years or mortgage lifetime. And that's just since January. That's just since, 9 months ago. 6%, the Times said, versus 2.686 a year ago. I'm going to bet things have changed rapidly for you. Tell us about, what the mortgage industry looks like, today, and some of the challenges that go along with that.
Sure. Yes, certainly, people have seen it in the mortgage interest rates. And I think the Wall Street Journal article this morning said that we hit, another high last week. Another high for mortgage rates, and they haven't really been at this level since 2008.
Mm-hmm.
So it's been quite a while since we've seen rates this high. They really grew further and faster than they have in probably 30 years. So that 3 points increase in the last 6 months, that's over a 100% increase in rates. So they pretty much doubled. Or more than doubled from where they were back in January, and definitely from where they were at this point last year.
Yeah, and
you combine that with, I would just add one other thing.
Sure.
You combine what's going on with interest rates with, the sort of well-documented lack of home inventory, available for people who are looking to buy a new home. You got the makings of a really difficult mortgage market.
Right. And I know that we talked as well that some of the challenges you're facing, in addition to all of those obstacles, is the rate at which the increase is happening has really flip-flopped the type of mortgages that you're doing now in your business. You did a lot of refis previously when the interest rates were lower and fewer mortgages. Now you're seeing that somewhat flip-flop. Can you talk a little bit about that phenomenon that's happening as a result of this rapid rise in interest rates?
Yeah, certainly. In less than a year's time, we've gone from doing probably 3 refis for every 1 purchase mortgage to a complete 180-degree flip of that, where now we do more like 3 or 4 purchase mortgages for every 1 refinance. And that's really driven by the interest rates, the levels of interest rates. Really the only refinances that are commonly happening now across the industry are cash out refis. Someone's got they've got a specific need, a project, a home renovation, something of that nature, where it makes sense for them to access the equity that they have in their home in order to pay for that renovation. And even with rates being higher than what they were before, that might still be a good financial decision for them.